Ek is Roodt. I'm Roodt. I'm the Chief Economist at the Efficient Group. Now, we've had a look at what can be expected for 2016, and it seems as if 2016 is going to be another volatile year. So let's unpack it and see what's going on, or what can be expected globally, and then move to the region and move to South Africa as well. First of all, the US economy, and I think the major story today, economically speaking, certainly is that the US economy is likely to see a further strengthening of the US dollar. And part of the reason for that has to do with two reasons. The one is that the US economy is doing, of the bigger economies, is one of those economies that's doing fairly well, while they also are likely to keep on increasing interest rates over the next couple of quarters. We, however, are not so certain that we're going to see significant increases in interest rates in the United States, because we believe that the US economy is likely to lose some steam over the next couple of months. And one of those triggers, or one of those indicators that the US economy is losing some steam, could be the 10-year TBs, or the 10-year bonds in the US economy, which may start showing a slight decrease in yields. If that should happen, expect the US economy to slow down. So in short, the US economy is not doing too badly, but we are not as optimistic as many other analysts. As far as the European economies are concerned, as always, most analysts like the International Monetary Fund and the World Bank, and even the Germans, they're all quite upbeat about the prospects for the European economy. And again, we're not that optimistic about the European economies. A number of reasons for that. Of course, we know that there's some new issues, and I'm referring specifically to the immigrants in Europe, and the social issues and the social consequences because of that. We know there's a lot of tension, political tension between Europe and of course Russia. That's also an issue, and we're also not so sure that the economic momentum in Europe will be maintained, particularly in Germany, the biggest economy in Europe, of course. Part of the reason why we say so is because the German economy is very, very dependent on exports, and with a slowdown in countries like, for example, China and the United States, and of course the other European countries, chances are quite good that the main engine in Europe, which is Germany of course, could show some deceleration in economic growth. In the meantime, Draghi has indicated that he will do again whatever is necessary to support that economy, so another bout of quantitative easing can be expected in Europe. So although there could be a bit of a slowdown in the economies, financial markets may react positively to additional monetary policy stimulus. The major other story globally, certainly that's impacting on the region and also on South Africa, is the slowdown in China. Clearly, the Chinese are experiencing very significant, very dangerous levels of debt, and in fact, nobody really knows what those debt levels are. Clearly, what is happening in China, there's a slowdown in economic growth, and there's always a possibility of a significant collapse on the financial markets. Part of the reason for the collapse of the financial markets, and part of the reason why the financial markets, especially the equity markets, are quite dear in China, has to do with the unsophisticated nature of the Chinese investors. And many of them invest without really knowing what they invest in the equity markets. And many of them may get into financial troubles because of the high debt levels and start selling their shares, and that can eventually lead to a significant correction on the equity markets in China. Additionally, the Chinese renminbi recently became part of the special drawing rights, the currency for the International Monetary Fund, and I think that was a bit premature because the capital markets are just not sufficiently developed in China to allow for a total free capital flow and a total correct price discovery of the currency, the renminbi. So I think it was a little bit premature, but certainly the Chinese won a major political battle in getting their currency included in the basket of the International Monetary Fund. Moving to Southern Africa, clearly Sub-Saharan Africa is at the moment slowing down quite a lot because of the commodity cycle. That's certainly negative for Sub-Saharan Africa generally. Some countries in Sub-Saharan Africa are not doing too badly, but those are countries that are usually benefiting from certain structural adjustments. But typically countries like, for example, the major commodity exporters like Zambia, South Africa, of course, and of course other countries like Namibia and even Mozambique will certainly suffer because of commodity prices being under pressure. Having said that, we believe that certain commodity prices are likely to rebound a little bit. One of those commodities that we're fairly optimistic about is the gold price itself. And that's more of a risk premium. So if the US dollar, which is the safe haven in the world, if that's not seen as the only safe haven in the world because of turmoil and uncertainty in financial markets, the gold price itself may increase a little bit, and gold producers, of course, can benefit from that. We believe that energy prices are exceptionally low, especially for oil, and we believe that we can see a bit of a rebound in oil prices as well, but we're not talking about very high levels of oil prices. Maybe $40 or in an extreme case, maybe $50 by the end of this year for oil, and of course the positive impact that will have on countries like, for example, Mozambique, which is a major exporter of gas. So the most of the countries in Southern Africa are likely to experience a similar sort of slowdown in economic growth than what can be expected in South Africa, while the drought is affecting, of course, the whole region, and of course will impact on economic performance as well. The South African economy faces a number of headwinds. Chances are very, very good that South Africa may experience a sovereign downgrade. If that should happen, there's a possibility of a short-term negative reaction on the currency as well as the bond market. We, however, are of the opinion that we've seen already to a large extent the currency pricing in a possible downgrade, the same or similar for the bond market. And we will not be surprised if the currency come back a little bit, but the reality is that the currency is likely to remain fairly weak for quite some time. And I think the region simply will have to learn to live with a weak currency, a volatile currency, and a currency that will continue to depreciate over time. So expect a weaker currency. We will also experience, and that's partly because of the drought and of course the weaker currency, inflationary pressures building up over the next couple of months. And what I'm very concerned about is inflationary pressures, especially in food prices. In fact, Southern Africa will have to import many millions of tons of grain because of the drought, and I'm concerned that the infrastructure simply will not be able to cope with that in all instances. So food prices are likely to go up. Also keep in mind that the Minister of Finance is likely to increase certain taxes. He will try to keep a lid on state expenditure, while the Reserve Bank will continue to increase interest rates. We are of the opinion that we can expect at least another 250 basis points increases until the end of the year, but that is also a function not only of inflation, but what the Americans are going to do as well. Point is, tighter monetary policy, tighter fiscal policy will also weigh on economic growth, and a possibility of a two negative economic growth quarters or a so-called technical recession cannot be excluded, especially in the second and the third quarter. As far as financial institutions are concerned, financial institutions to a large extent are very sensitive to currency movements. They're very sensitive to inflation, of course. They're very sensitive to the bond market movements, and of course very sensitive to monetary policy. All those factors are likely to be mostly negative, and I think the conclusion can be made that demand for credit is likely to be under some pressure, or at least a reduction in demand for credit. It's also likely that people with excessive debt levels may get into some sort of financial difficulties, and I think banks simply will have to maybe look at their debtors book quite carefully to make sure that whatever they put on their books, that the chances of possible defaults have been factored in, because there's a possibility of some bad debt. Additionally, expect demand for credit to be under pressure as well. As a last, maybe important point to mention is that because of the environment, because of very high levels of unemployment, because of the drought, and because of the reality of actual hunger in the population in the sub-region, what I am concerned about is social upheaval. We've seen that already in the last couple of years, in fact, but especially last year in South Africa. And social upheaval is a real possibility, especially if the Minister of Finance in South Africa is forced to increase value-added tax, as an example. And then maybe a last note to end on. We have an election in South Africa somewhere during the year. We have a political leadership that is a questionable political leadership. We have uncertainty as far as policy is concerned. And without a doubt, the international investor community as well as the local investor community are very concerned about the sort of noises and the uncertainty coming from especially South Africa's political leadership. 2016 is not going to be easy. The sooner the Reserve Bank tightens monetary policy, the better. The sooner the Minister of Finance gets fiscal accounts under control, the better. Unfortunately, there will be a short-term price to be paid.